My $150,000 HELOC experiment has grown enormously over the past, well, we're about to approach our 4th month. It's not exactly what we expected. We are navigating, but it's unbelievable. So let's take a look and compare side by side where we were to where we are. So let's go over where we were. Back on March 1st, it was a $150,000 HELOC loan. My margin was only 906 and the interest rate was higher. That's gone up substantially. My total costs were 2106. My expected dividend was 69 cents. So I calculated it out that times only 13,000 shares, I'd get $9,500, and it would cost me $2106 a month. That's the HELOC loan and the Robinhood Gold member margin. I'm not a financial advisor, but you should never follow me. But I ran this by my real financial advisor, and he knows my risk tolerance, and he knows that this is a tiny bit of an amount of a portfolio for me. So, and he knows that I could pay this back in a second if things went wrong. So he actually said, well, I'd go for it, all right, and pump it to the hilt till the end of the year. And keep in mind taxes, and I do. So here's how it's grown in a short period of time. I went from a meager, what I expected to be $9,000 a month, and make about $7,400 a month after expenses. Well, it's exploded to $23,000 a month. Okay, and let's do a side by side and how this happened. So we had, when we look here in the simple plan, we had higher interest, we had a low dividend yield, which picking AMSI was the way to go. All right, and the only thing is this is going to go a little longer than I thought because I am flying a starship. Okay, I am flying a simple, dedicated mission. Now, many factors along the way will change this. This was the simpleton version. Okay, and we had, how many shares did we have when we started? Let's take a look. I believe it was 13,000. Well, it swelled. I did no reinvesting. I will cover this in my next video. Make sure you subscribe. I call it profit ripping. It rapidly accelerates. You're getting whole on your investment. There's a difference between, you can go back and watch my older videos. People are raving about this. Core compounding and profit ripping. Profit ripping is a simpler thing that I do. In my next video, after I cover this, I'll go over the difference between core compounding and profit ripping. If any of you out there are doing any form of core compounding, tell me in the comments, core compounding or core, something like that. And if you want to know more about this profit ripping, just write rip. Let me know. All right, so we've swelled, look at this, from 13,000 shares here to, where's my share count? 24,000 shares of AMSI. Massive jump. The dividends, as expected, that's why I chose this, popped up to 95 cents. They hit 97 cents, like that, right? Right now it was 95 cents, I believe, right? So we'll just use these numbers. I did get 2,000 shares totally free of something else that I thought was a good, let's call it yield to price to potential ability. Now, my monthly profit is going to be $25,000. Sounds all rosy, right? But my total costs have gone up. My Robinhood margin is $14.11, even at a lower rate of 6.25. So my total costs are $2,600 now. Before, my total costs were $2,100. How did we double the income, add at least almost 10,000 total shares to this? Okay, well, in the middle, I did an acceleration plan. Okay, hold on, let's go to present. Oh, I have so much to talk about. Okay, rocket engines on Teslas and Tesla and all kinds of stuff. And I'm going to get to some reader comments here. Look, the three marks, we covered this. These people were completely used and made fools of, and I love it. Free marketing from noobs. These are the three YouTubers, right? We got Retire on Dividends, Boring, I forgot her name, Happy Hick or something, and we got Max Convection Oven Eater. So these three would never ask any hard questions. They're the type of people, okay, who you throw in and you say, oh, let's take you to the stock exchange. Let us buy you lunch. Come and spend a day at Yield Max. And what do you get for that? So let's say it costs Yield Max, I don't know, a couple of grand out of our fees, right? That we pay. I love Yield Max. This was genius. They even, you know what the giveaway was? They gave them like little Yield Max logoed stuff. Like this guy, Clown on Dividends, who's proud of me, $20 selling puts, and then has the balls and audacity, okay, to annualize that. As if he's going to win that $20 every trade. Clown. This guy's so boring. These are the spreadsheet warriors. They're like, these people are non-controversial. They just talk about our funds and make spreadsheets. They're not threats. Let's give them some souvenirs. Let's come here, let them over here, let them verbally blow us, right? And then we get all kinds of free marketing all over YouTube. It's the best money ever spent on three schmucks, weak YouTubers who have no real original content. Anyone can make a spreadsheet and read it to you as you watch paint dry, okay? Oh, I don't know how I got here. Anyway, sometimes I fall into a chasm, okay? I fell into a chasm. Everything's exploded. So here's what I've done with my money. I was going to pay off, and a lot of people, I'm seeing videos out there, are using HELOCs. Why did I do it? Look, it's free money sitting there. Why should I put my own $150,000 in this? Why? Tell me why. When I can use, and what would that do? That would take away liquidity from my liquidity pool, right? And I would save what? $1,200 a month. This thing is making $22,000 a month. Think like a business person. Actually, that's after expenses. Making $25,000 a month. At one point, you know what I did? I did the acceleration plan. Yeah, let's go all the way down. Okay. Now there's a lot of naysayers. I saved these. This was my acceleration plan. So the acceleration plan kicked in. Hold on, let me get rid of these schmucks. The acceleration plan kicked in when I seen this, and I was like, wow. So I took $100,000 of my own money, added it, okay? And I don't care when I get paid back. First thing is still paying back the principal. And I did all this kind of math, blah, blah, blah. And I was like, oh, this will work. And you know what? It worked, all right, to get me here right away. June income, we're looking at almost $25,000. But who knows? We don't know what Yield Max is going to do. Why do I hold? Why did I get this? Where did I get these 2,000 shares? Well, here's what I did. Let's go here. Okay. First time I got a dividend, I paid a $5,000 principal payment to the mortgage company. The second month, I kept the money and I just paid an interest payment. Okay. And the Robinhood payment. Okay. My Robinhood payment just came out. Okay. I had that down here somewhere. Okay. I don't know. Yep. Here it is. Is this it? No. All this scrolling is making me sick. Look. So this is my margin cost. Now I know the date it comes out. Look. So that's my margin cost. And you know what? That's exactly what's here. Okay. 1411. So my total costs are 2611. I put $100,000 of my own money, and that's how I got here. But I started it with free HELOC money. Now, here's the dividend. So I have a $32,000 cushion in the bank. Okay, don't forget we didn't talk about taxes. It's not all that rosy. Okay, just based on these numbers alone. Okay, hold on. Based on those numbers alone, I am looking at needing to put down about $6,000 a month for taxes. That needs to be on here. Do not be fooled. Do not get hoodwinked at the end of the year and owe $100,000 because I'm going to build this like mad. So that needs to be thought of, and we're going to think of that, okay, as this $32,000 right here. We're going to leave that, let that sit and accumulate, okay. Towards the end of the year, I'm going to use the next 6 months of the year. It's still June. And I am going to rocket boost this. I think I'm only going to pay interest on the HELOC for now. Okay, and after going over this with my financial advisor, he says, listen, he goes, go balls out till this is for me, not for you. Go balls out till the end of the year. He says in the last, 2 months, those dividend payments, you pay your taxes. He says, and then you can start hitting the principal. Okay, really hard. So, I got a $9,000 dividend. I got a $14,000 dividend. I don't reinvest. Okay, I do profit ripping. It's different. Then when I got to $23,000, look, 22, this one, the June dividend, I say, let's balance things out here. Let's go. And this channel, I'm sorry, is not about spreadsheets. I make fun of other people sometimes, in hopes of educating you that spreadsheets are a waste of time. That I am not selling you any securities. I don't offer any links. There's no buy me a coffee. There's no donation. There's no click here to get dividend tracker. Click here for, what's the other one that I can't stand? Seeking Alpha, where they get all commissions. There's none of that here. Just subscribe. Okay, now, YouTube doesn't like my content. Okay, they never want to monetize. I'm monetized, but I don't care. I don't click the button. Okay, so that's why you don't see a little dollar sign anywhere. You don't see none of that. There's no super chatting. There's strategies. We're here to make money, and it's working, people. I chose AMZ because it's Amazon. It's a broad range of the entire market. Right now, we are in AMZ Army. We're in the quiet time. Don't you know the cycle? You see, you have earnings, everything's exciting before earnings. There's the build up into earnings, and then after earnings, there's the excitement, good or bad, and then there's quiet time. We're in quiet time. All right, we're at the end of June. Earnings are August. I'm already seeing the articles start to pop up promoting Amazon indirectly to the market. Saying things like, oh, Amazon's developing this. Could Amazon share price reach all new highs by this date? And we expect this from Amazon. And oh, wow, they're going to do that. And they're working on a new Alexa, an enhanced Alexa that is not included in Prime. This Alexa will be like ChatGPT, okay, but advanced. It's their AI system. And think, everyone has Alexa. Their homes are wired with it. It is great. Okay, now it's not great for like people, but it's great for the company making money. I mean, you choose to have all that shit in your house, that's on you. I don't have that crap, bro. Okay, I'm secured by Magnum. Anyway, so let's keep rolling. So, the next divs were here. Now, this dividend, I did something super exciting. When it hit my Robinhood balance, it doubled. Because they allowed me to march in it. You know what I believe in, right? Leverage to the tits is what we say here. So, 2,000 shares of Crash. They're worth about $40,000. So I took that dividend and I spent it wisely. Why did I choose Crash? Well, it's the dividend price ratio that I like. It's the story that I like. And even though it is an inverse of Tesla or Tesla, okay, I have no emotional involvement. I noticed the first month it did a really good dividend and price action. And Tesla did pretty well. So what will happen if Tesla has chop? Crash will make dividends every month. It's different than holding an inverse ETF, which is like 1.5 short, like pro shares, like shorting the NASDAQ or something. I would never do that. That's meant for short term. You need to hit it right and know what you're doing, and it don't pay a dividend. I want to let this sit and fester, okay, like a fungus, and let it pay me dividends until shit hits the fan, and then it'll go up in value probably and pay more dividends. It's pretty exciting. So I have my long is AMZ. My short play is Crash. Now, if the market goes down, Tesla and AMZ or Amazon will go down. Everything will be affected. There's no hiding in the Russell index. There's no hiding anywhere. There's no hiding in CLIP, in international funds. It's a ripple effect. So, Crash will stand up and be victorious and do a double bicep pose like a douchebag on Wall Street. You know what I mean. Anyway, subscribe. There's gonna be more. We've made tremendous progress. Talk to me in the comments about what you're doing. Remember, I've been so busy, and there's no monetary value in me making these videos. You know, all there could be is criticism and clowns, and we've certainly seen the clowns. Bring on the clowns. Anyway, spreadsheets over strategies. I'll take a strategy any day, and apparently my strategy is working. Shout out to the Kumars. I see his vision. I understand. He's the only other YouTuber in this space that actually makes content for people. Anybody telling you retire on AMSI, retire on Tesla, and giving you fantasy spreadsheets, they're virtually blowing you for views. Have a nice day. Boom.